Greetings and a warm welcome to you all to the auditing learning session. Today we are going to study the specific internal controls on purchases, sales, inventory, cash, procurement, and non-current assets. Specific controls. Now, if you are running business, it is important that you put in place controls over some of these activities, like purchasing, like non-current assets, sales. There has to be controls so that the organization does not lose money, so that the assets of the organization are safeguarded, and so that the objectives of an organization are met. So it's very critical that there are controls in purchases, sales, inventory, cash, procurement, and all these key areas. So the aim of these controls is to minimize risks of errors, is to minimize fraud, and also inefficiencies. So we'll be looking at the controls for these areas one at a time, beginning with purchases. Now, purchases, there are various activities around purchasing. Purchasing, in fact, is a cycle which involves requisitioning, ordering, receiving, and even payment of goods or services. Before a purchase is made in an organization, the goods that are being purchased have to be requisitioned by a requisitioning department. Maybe, for example, the sales department requires raw materials. They have to raise a requisition note. So that's where it begins. Then after that, then the company has to place an order. Ordering is another set of activities around purchasing. After the goods are ordered from suppliers, they are delivered. There is the receiving. Then after the goods are received, according to what was ordered, if they are in good condition, then the finance department may then organize for payment. So those are the key areas. There could be some other activities like inspection, receiving, storage, and all that. But requisitioning or requesting, ordering, receiving, and payment, those are the main activities in the purchasing cycle. So what are the key controls in purchases? The first one is segregation of duties. Segregation of duties. That means separating individuals or departments for initiating purchase requisitions, providing purchase orders or approving purchase orders, receiving goods, recording purchases and payables, authorizing for payment, and so on. So in the purchasing cycle, there ought to be segregation of duties. The one who requisitions, purchase, the one who initiates, let me use the word initiate, the one who initiates a purchase requisition should not be the same person or department that approves the orders. Should not be the same person that receives the goods. Should not be the same person that records the purchases and payables. And should not be the same person who authorizes for payments. There ought to be segregation of duties that are identified. Duties like initiation, purchase, requisitions. Another duty is the approving of purchase orders. Approving or before recording, you have receiving goods, receiving, then there is recording. If the goods are not paid in cash, then there ought to be recording of the purchases and payables. If the goods are not paid for in cash, then the company has to record payables, account payables. These are creditors. Then there is also approval. All these duties have to be separated. They have to be segregated. They may be carried out by a department or an individual. There are companies that have departments for requisitions. There are companies that have departments for receiving orders. It depends on the company, but they should be segregated. So that's the first control in the purchase cycle. Number 2, authorization and approval. Authorization and what has to be authorized and approved? We may have the purchase requisitions. For example, the purchase requisitions must be approved. Purchase requisitions have to be approved. This requires proper authorization for all purchase requests based on budget limits or management approval. We also have purchase orders. Purchase orders should also be authorized and approved. All purchase orders must be authorized by designated personnel, ideally with a multi-level approval process for larger orders. And purchase orders should be pre-numbered and also properly accounted for. Authorization and approval. 3, the third control is in relation to documentation. Documentation. It's important to maintain a complete and accurate documentation for all stages. Numbered purchase requisitions, the authorized purchase orders, receiving reports, supplier invoices, payment vouchers, all have to be documented. That is a control. Every aspect has to be every transaction must be supported by documentary evidence. You understand? Maintaining complete and accurate documentation. 1. Then there is 2, matching the 3-way match before payment. Matching the 3-way match. Matching the 3-way match. Matching the 3-way match. Matching the 3-way match before payment. Purchase order, that means purchase order, receiving report, and supplier invoice. The 3 must match before payment is made. That is a control. And that can only be made possible where documentation or documents are maintained. 4, there is a control in relation to receiving. Receiving procedures. There ought to be dedicated receiving department with personnel independent of purchasing and accounting. The ones who are receiving should not be part of those who are purchasing, and those who are accounting. There should be dedicated department just for receiving of these purchases. Then there should also be creation of pre-numbered receiving reports. This receiving should also be backed up with documentation, goods received notes. This department should have the goods received notes. Because when goods come in, they have to be stamped received. A copy is given to the one who delivered, and a copy is maintained in the company. These goods received notes have to be pre-numbered noting quantity, condition, and even discrepancies. And there ought to also be prompt inspection of goods for quality and quantity. When the goods are received, the quality of the goods has to be checked. The condition of the goods, the quantity of the goods should be in accordance to what was ordered. So that is a control in relation to receiving of the purchases, receiving procedures. Then the second, purchases controls. 5. Let's move on to the 5 control, which is invoice processing and payment. Invoice processing and payment. Now, before payment is made, there ought to be verification of invoice accuracy against purchase orders and the goods received note. There should also be checks for mathematical accuracy on invoices and also timely recording of liabilities. Then there is the aspect of authorization of payments only after proper matching and verification is done. Before payment is made, there ought to be proper matching. What was requisition? Is it what was ordered? Is it what was received? So all the documents at each stage have to be analyzed and also checked for accuracy. And there ought to be use of pre-numbered checks or electronic transfer authorization. That is in relation to payment. Then lastly, we have master files. The master file, the supplier master file controls. Supplier master file. The supplier master file controls. There should be strict controls over adding or amending supplier details in the system to prevent creation of fictitious suppliers. We've seen companies grappling with this problem, where fraudulently names of suppliers are included in these master files, and that is a form of a fraud where a company can lose a lot. So there ought to be strict controls over adding or amending supplier details in the system to prevent creation of fictitious suppliers. And there ought to be independent review of new supplier setups. So these are 6 controls. 6 controls. 6 controls. Now let's move to specific sales controls. Specific sales. We've done purchases. We move to specific controls on sales. Now, the sales cycle covers, just like the purchases cycle, areas like order taking, credit approval, shipping, billing, cash collection, and so on. When a company makes a sale, and most likely on credit sale, there are various activities around the selling activities. The selling activity has various activities within it, and that includes order taking. Before you sell to a customer, you have to receive an order from the customer. That's what I'm calling order taking. After receiving the order, then there ought to be credit approval. Before you supply to a customer who is not paying cash, there has to be an approval process to find out whether that customer deserves to be sold goods on credit. That's what I'm calling credit approval. Then there is delivery. We sometimes say shipping. Delivery. Delivering the goods to the customer is also another stage. After the goods are delivered to the customer, there is billing. How do you do the billing? Sending the invoice. Then there is cash collection. So those are the activities in the sales cycle, but our focus is on controls. So what are the specific controls? Now, one control is in relation to just segregation of duties. I've mentioned some of the activities. There ought to be segregation of duties. There ought to be separate individuals or departments for order entry, for credit approval, for shipping goods, for billing or invoicing, for recording sales and receivables, for cash collection and depositing. All those activities should be handled by different individuals. That's what we are referring to as segregation of duties. 2, authorization and approval. Authorization and approval. All sales on credit must be approved by the credit department before goods are shipped. Number 3, we have sales returns, sales return stock allowances. Sales return stock allowances. That requires proper authorization. There ought to be proper authorization for all sales returns or allowances to prevent fictitious returns or unauthorized write-offs. Another control around sales is pricing. Pricing. There ought to be authorization of pricing. There ought to be authorization in relation to discounts and even just terms to ensure adherence to company policy. To ensure adherence to company policy. You understand? Documentation. Documentation. There should be in place pre-number sales orders and even shipping documents like delivery notes and sales invoices. Those ought to be pre-numbered, and the company should maintain a comprehensive audit trail for all sales transactions. There is also the question of delivery or shipping. Shipping, let me say, shipping procedures. Shipping procedures. Goods shipped only upon receipt of, let me say, receipt of an authorized sales order. Goods should be shipped only on receipt of an authorized sales order. Before you deliver goods to a customer, that delivery must be based on an order that was made by the same customer. And the shipping documents should be pre-numbered. The pre-numbered shipping documents generated for all shipping or deliveries. There should be pre-numbered shipping documents that are generated for all deliveries, confirming quantity and description of goods dispatched. Then, as a control, also there ought to be periodic reconciliation of shipping documents with sales orders and invoices. 7. The 7th control is in relation to billing procedures or invoicing. Billing procedures or invoicing. There ought to be timely and accurate invoicing based on the goods that are delivered and authorized prices. There should also be matching of sales order, shipping documents or deliveries, and also sales invoice before invoicing or billing. You have to match all those documents before invoicing. Of course, we have to mention automated checks for pricing and quantity on invoices. That is also a control. Then number 9 or number 8, we have accounts receivable management. Accounts receivable management. Accounts receivable management. There ought to be regular reconciliations of accounts receivable subsidiary ledger to the general ledger, and also periodic review of aged accounts receivable reports and follow-up on overdue accounts. Still under accounts receivable, there ought to be authorization for bad debts write-offs by independent personnel. So these are some of the specific controls on sales. Let's move on to the third component, which is inventory. Specific controls on inventories or stock. Inventories or what we call stock. Inventory controls are crucial for safeguarding assets and ensuring accurate financial reporting. And some of the key controls in inventory are physical controls. 1, physical controls. If a company has inventories, then there ought to be in place physical controls. That includes restricted access to the stock, limiting access to inventory storage areas to authorized personnel only. There ought also to be secure storage, like using locks, security alarms, surveillance cameras, and so on. That is physical controls. Restricted access, secure storage. We may also have physical segregation. That means separating different types of inventory. For example, raw materials from work in progress. You separate work in progress materials from the finished products and so on. That is what I'm calling physical segregation. A company may have stock of raw materials, stock of work in progress, and stock of finished products. Those should be segregated. The company may even have damaged goods. The damaged goods should be separated from the good goods. Then still under physical controls, you may also have counting, physical counting, stock taking, regular counts, performing periodic physical inventory counts. It could be an annual count or cycle counting, and then reconciling them with perpetual inventory records. So that's the first control over inventory, physical controls. Number 2, documentation. Documentation and record keeping. There should be in place pre-numbered goods received notes for all incoming inventory. There should also be pre-numbered goods received notes or material requisition forms for all outgoing inventory. The company should also maintain perpetual inventory records that track quantities and values of inventory on hand, updated in real time or near real time. There should also be detailed records of inventory movements in and out of the storage. 3, segregation of duties. Segregation of duties is another control over inventory. That means separating duties between custody of inventory, number 1. Number 2, record keeping of inventory. Number 3, procedures to ensure inventory is valued accurately or correctly, and so on. So all those areas should be segregated. Then we have 4 valuation controls. Valuation controls. There ought to be procedures to ensure inventory is valued correctly, like the first in, first out method, the last in, last out method, the weighted average method, and so on. Valuation also means there ought to be regular review for obsolete, slow-moving, or damaged inventory and appropriate write-downs. You understand? Then I need to also mention reconciliations. Reconciliation is also another inventory control. Reconciliation means reconciling of perpetual inventory records with the physical counts. It could also be reconciliation of inventory subledger to the general ledger control account. So these are specific controls on inventory. Allow me to move on to specific controls on cash. Cash. What are the specific controls of cash? Now, cash is the most liquid asset and highly susceptible to fraud and misuse. So there ought to be strict controls over cash. One control is segregation of duties. Segregation of duties, just like all the other areas. Segregation of duties is always necessary. Separating individuals or departments who, 1, receive cash. Number 2, those who record cash receipts. Number 3, those who deposit cash. Number 4, those who authorize cash disbursements. And number 5, those who reconcile bank accounts. All the individuals, there ought to be different people carrying out those duties. Receiving cash, recording cash, depositing cash, authorizing cash disbursements. Those individuals who are reconciling the bank accounts should be segregated. The second control over cash is cash receipts. There are controls over cash receipts. There are controls over cash receipts, receiving the cash. There ought to be prompt record. There ought to be proper recording and deposit of cash. That is to mean that all cash receipts should be recorded immediately upon receipt and deposited intact daily. Another point over the cash receipts is that there ought to be pre-numbered receipts. That means issuing pre-numbered receipts for all cash received. If you are selling, for example, books, every customer that buys a book has to be issued with a receipt that is pre-numbered. Then, of course, if you are handling physical cash, then there ought to be what we call lockbox system. That is a control. That is to mean utilizing a lockbox service where a customer payments are sent directly to the bank. So those are controls in relation to receipts. Then we have cash disbursements. So if a company that is dealing with cash, there ought to be cash that is received. That cash may also be disbursed. So what are the controls around disbursement? The first control when disbursing cash is authorization. All cash disbursements like checks, electronic funds transfers must be properly authorized, typically requiring multiple signatures for large amounts. Then again, in relation to cash disbursements, there ought to be supporting documentation. Payments should only be made for authorized expenditure supported by proper documentation. For example, approved invoices, for example, the purchase orders and so on. So purchase orders, we know at a point they have to be paid. So before paying, you need to ensure as an accountant that the orders were approved. So there ought to be supporting documentation. Another control over cash disbursements is the use of checks or EFTs. That is to mean minimizing cash payments, minimizing paying by cash. The company can have a system where suppliers are paid electronically. Then there should also be segregation of duties in disbursements. That is to say, separation of duties between approving invoices, preparing checks, signing checks, mailing checks, and so on. All those duties should be segregated. Then again, on cash disbursements, there ought to be what we call petty cash, maintaining a petty cash on an impress system with regular reconciliation and replenishment based on authorized vouchers. This is yet another important control. Bank reconciliations. The company should have independent preparation of monthly bank reconciliations by someone not involved in cash receipts or disbursements. And there ought to be prompt investigations and resolution of all reconciling items. And the company should have in place reviewing of bank reconciliations by a supervisory individual. Cash flow monitoring is another control where there is regular cash flow focus and monitoring to manage liquidity. There should be also controls over electronic funds, including dual authorizations and strong authentication. So these are 5 controls over cash, specific controls. Then we have specific controls on procurement. Specific controls on procurement. What are the specific controls on procurement? Now, procurement is a broader term, candidates, encompassing the entire process of acquiring goods, services, and work, including sourcing, contracting, including vendor management, and sometimes overlapping significantly with the purchases cycle, but extending further. So what are the specific controls on procurement? One is procurement planning. Procurement planning. Procurement planning. That means developing clear procurement plans linked to organizational needs and budgets. That means defining procurement methods like tendering, direct sourcing, and so on. That is a control. We have also controls over vendors. Let me just say vendor management and selection. That means maintaining an approved vendor list based on rigorous qualification criteria by looking at this criteria is developed based on the financial stability, the quality, and even compliance of the vendor. So there has to be a list of vendor or suppliers. Then there should be in place competitive bidding processes for significant procurements to ensure best value for money. The company ought also to have independent evaluation committees for bid analysis and vendor selection. Then lastly, there is due diligence on new vendors. There ought to be due diligence on new vendors. That is also a control. Contract management. There are also controls around the management of the contracts. There ought to be formal written contracts for all significant procurements. The terms and conditions should be clear, including specifications, deliverables, timelines, and payment terms. Then, of course, another control under contract management is monitoring contract performance against agreed terms, and also controls over contract variations and amendments. There ought to be controls over contract variations and also amendments. You understand? We can mention documentation and audit trail. That means having a comprehensive documentation for every stage of the procurement process, from requisition to contract closure and payment. Another control here is having a centralized and secure record keeping, and so on. Ethics and conflict of interest, number 5. Ethics and conflict of interest. 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 The company should have clear policies on ethical conduct and conflict of interest for all procurement personnel. There should be declaration of interests required from staff involved in procurement. Another control is having whistleblower mechanisms for reporting irregularities. So these are 5 controls over procurement. Then lastly, we can discuss controls over non-current assets. Controls over non-current assets. Non-current assets, these are fixed assets or property, plant, and equipment. And candidates' property, plant, and equipment, or just non-current assets, are significant investments that require robust controls to prevent theft, to prevent damage, and to ensure accurate financial reporting. One control is authorization and acquisition. One control is authorization on acquisition. Authorization when buying these assets and when disposing the assets. There ought to be formal authorization required for all capital expenditures, often based on budget limits and requiring board or senior management approval. Another control here is having clear policies and procedures for the disposal of non-current assets, including proper authorization and documentation. Asset register is another control. Asset register. Maintaining a detailed, up-to-date non-current asset register, what we sometimes call fixed asset ledger, that includes asset description, identification number, for example, the log or tag number. We may have the date of acquisition. The asset register should have another column for the cost. For location, there is a column for depreciation method and the depreciation rates. The asset register should also give the accumulated depreciation, the net book value, the disposal details, and so on. You understand? asset register. Then we have physical safeguards. Physical candidates, non-current assets are physical assets, and therefore they require physical safeguards like asset tagging. Asset tagging. That means physically tagging or labeling assets with unique identification numbers. Unique identification numbers, what we are calling asset tagging. Still under physical safeguards, we may have physical security. That is to say, securing assets through locks, alarms, restricted access, environmental controls, and so on. Physical safeguards is also made possible through insurance. There ought to be adequate insurance coverage for all significant assets. There ought to be segregation of duties between custody of assets, number one. Number two, record keeping, which is the asset register. Number two. Number three, authorization of acquisitions or disposals. Then there is performing physical counts. So all those duties should be segregated. Those who are maintaining the asset register should not be the one doing the physical count of the assets for verification. There ought to be in place periodic physical verification, regular physical counts of non-current assets, and reconciliation with the asset register to identify any missing, damaged, or misplaced or unrecorded assets. Then we may, if you have assets that are damaged or assets that are missing, then another control is to carry out investigations. And repair controls. Maintenance and repair controls. That entails establishing clear policies distinguishing between capitalizable improvements and routine repairs. When repairs are made, it's important to distinguish are the repairs capitalizable or not. Then still on maintenance and repair controls, we have authorization for significant maintenance contracts. There ought to be controls. There ought to be authorization for significant maintenance contracts, because that it could be one area for fraud, where the company incurs fraudulently high costs for maintaining these non-current assets. So there ought to be authorization before assets are maintained or repaired. There should be a person senior in ranking authorizing such expenditures. Then lastly, another control is in relation to depreciation and valuation of non-current assets. That entails regular calculation and recording of depreciation according to established accounting policies. The company should have periodic review of estimated useful lives and residual values. And there should be in place controls to ensure assets are not overstated. So these are the specific controls for purchases, sales, inventory. Then number 4, cash. Number 5, procurement. Number 6, non-current assets. We've discussed in detail each aspect of these processes. Purchases is a process, it is a cycle. We've highlighted the specific controls. We've done the same for purchase, for sales, for cash, for procurement, for non-current assets. So these controls candidates, when properly designed and implemented and monitored, they form a crucial part of an effective internal control system, which then helps organizations to achieve their operational, their financial reporting, and even compliance objectives. And with that, candidates, the lesson comes to an end. The lesson was specific controls for various business cycles and asset categories. And we did say that the main aim of these controls is to minimize the risk of errors, fraud, and inefficiencies in an organization. Thank you for taking your time to attend this lesson. In our next session, we continue to share knowledge in auditing. Bye-bye.